In this interview, I'm going to be talking to Matthew Nordan, who is the co-founder and general partner of Azolla Ventures. They focus on cutting-edge technologies around climate change, and he spent 25 years as an investor, advisor, and analyst. So, welcome to the interview, Matthew.
Glad to be here, Mark.
Well, look, this is really interesting for us because here at Energy Media, we have stopped talking about climate change about 3 years ago because we found that people were tuning it out. And they're more interested in clean energy technologies for the benefits that it provides them. So if I buy an electric vehicle, I like the fact that it has great acceleration or it's a status thing. Or if I buy a heat pump, it's because it gives me, lower operating costs and a more comfortable home, that sort of thing. But you're still investing in climate tech. So give us a little, explanation. Why is that?
Sure, it's an interesting point, right? Because I do think in some ways the language has gotten stale. And the same way that words can become just signifiers of tribalism, I think we see a lot of that out of climate. Yeah, from our perspective, look, if you look in the last year, you had about $1 trillion worth of uninsured losses that were occurring in the US because of a temperature rise, measured at the sea, measured in the air, measured whatever, and the ways that that manifests itself, which have quite broad implications. We get concerned, when there were more hurricanes or when there are other extreme weather events. The ties to those, how directly they go to sort of anthropogenic concerns, who knows? But there are other things that are sort of more straightforward and are quite systemic. We now have icebreakers who are trawling the Arctic as the ice breaks up, kind of preparing in advance for the Sino-Russo-American War of 2040. In my country, here in the States, there have been great levels of societal disruption that have been caused by having 1 million people crossing the border every month. What happens if it becomes increasingly harder to grow crops in Central and South America and that becomes 2 million or 5 million or 10 million? So I think there are sort of longer term, multi-generational sectoral trends that have a glimmer in how the climate is changing, regardless of how and why you may believe that's occurred, that come down to hard realities about how we'll maintain the societies that we've lived in, the economic system that's rewarded us, and freedoms that have sort of made the Western world work. I think that's why.
Okay, take that view and put it into the context of the Trump administration in the last 6 months,
Yeah.
because everything that I'm reading and the experts I'm interviewing from the states, it's a sea change. It's completely different. And how does that affect your business model?
Well, a few things. We've seen this movie before. Our organization has its origins in a 501(c)(3) public charity trying to figure out how do you get capital formed to invest in stuff that's just longer term and higher risk than the norm. We started doing that work in 2013. We started making our first investments in 2015. We raised our first proper fund during Trump 1.0. So we've seen these cycles kind of go in and out. I think there's some nuance to it. We did an audit of our portfolio, just after the election and tried to look at of the 30 odd companies we've invested in, how are they impacted by the Trump admin? For about a third of those, it's certainly headwinds, right? They're in categories that are not in favor from the current administration, whether that's electric vehicles or wind. And we expected that when we invested in those companies. We tried to do that in a resilient way that could be insulated from the shocks that happen of policy and regulatory matters. The interesting thing is that for about a third of them, not really any effect. It's kind of what you went to earlier, Markham, where you talked about I'm investing in this interesting air conditioner. It happens to be lower greenhouse gas emissions and use lower global warming potential refrigerants. But why did I buy it? It doesn't take up my window. It's really quiet. I can control it from the internet. I can turn on at the right time, so I lower my electricity bills a little bit by moving around when the house gets cool. It's a company called Gradient in California. Very cool. All of those things are kind of really driven by just market fundamentals. They're not really touched a lot by regulatory or policy matters. But the interesting thing, I think, is that for about a third of the portfolio, the Trump admin is the best thing that ever happened to these companies. We've
Okay,
invested in
hang on.
five.
I've got to jump in here, Matthew, because that is a phrase I have not heard in the last 6 months at all. Please explain that.
Yeah, critical materials is probably the best example. We came to a point of view in 2017, quite early, that if there was an energy transition that was going to happen at some level, it would also be a materials transition. A great example is if you buy an electric vehicle, right? You just bought a car with 6, 7 times more copper. And that's true for a whole wide range of commodities, for copper, for lithium, for rare earth metals, for semiconductor materials like gallium. Um, we started investing in this category at a lithium extraction company called Lilac Solutions in 2018. We've done four more since in fields ranging from rare earths to copper to mixed ores. And what have you seen under Trump? You've seen the Defense Production Act mobilized to help pay for the capital equipment needed for domestic materials production. You have seen extraordinary tariffs based on imports, most recently of copper, at a level of 50% to encourage domestic production. And you have seen a great effort to streamline the permitting and regulatory processes that enable you to do exploratory mining activity and then scale up from now. It's fair to say there is no better time to be launching a startup company or even a junior mining company in one of these critical materials areas today than it was 20 years ago. The other one I will point out to you um, is anything relating to clean, firm power. So things that can power AI data centers, where we're seeing extraordinary load growth for the first time in a couple of generations. You can't buy a natural gas turbine for delivery anytime earlier than 2031 today. So if you are Alphabet, Meta, any of these companies, you are scrambling to figure out how am I going to power a facility, and in particular do it from a behind the meter way that doesn't require grid interconnection or depend on grid transmission to be built. The answers to that are renewables plus energy storage. They are nuclear, whether small modular fission or fusion, and they are geothermal. And we have portfolio companies in each of those areas that have dramatic pull, the likes of which I've never seen before.
That makes fits perfectly with the messages we're getting from other folks. And there's a couple of areas I'd like to explore with you. The
Yeah,
first one is the idea of the materials transition. And I have to tell you, I ran into this about 2 years ago at a petroleum congress of all places,
sure.
because Saudi Aramco was there with its VP of technology, Dr. Ibrahim Abba, and he was moderating a technical presentation on turning hydrocarbons into advanced materials.
Hmm.
And Alberta, as it turns out, is one of the leaders in the world in turning bitumen into carbon fiber and other things like asphalt binder and graphite and so on. And the Dr. Abba talked about, he said, there's an energy transition, but there's a materials transition going on. And it's better chemistry and it's better materials and it's scaling them up and on and on. We're in the early stages. And it sounds like you're plugged into that trend.
Very much so. A few things are happening all at once, right? One of them is that we just need more. We need more copper, we need more lithium, we need more rare earths. Like in most extractive industries, right? You start with the most attractive, sort of techno-economically favorable sites. Then, from a mining perspective, you start going into low-grade ores and then to lower-grade ores, and existing processing technology just can't get you there. And there ends up being a strong, just pure economic driver to do something different. To give you an example, there's a company we've backed recently, a stealth mode company out of MIT, recently sort of unveiled itself called Rock Zero. And its technology is about being able to dramatically change the economics of getting lithium out of hard rock. And why does that matter? If you look at a commodity price curve, where at some point there's somebody who has the marginal cost, they get the price but no profit, everybody else gets the difference between those two. That in lithium is really set by these hard rock producers who mine a material called spodumene. And the problem with getting lithium out of that is that the rock comes out of the ground in its alpha crystal phase, and you can't liberate through any kind of conventional treatment the lithium out of it until you roast it into its beta phase, which you do at very high temperatures that requires burning a lot of energy and accounts for a majority of the cost of the commodity. The company that we backed has come up with this novel way of being able to skip that step and just be able to get the lithium directly out of the same crystal phase the rock comes out of the ground in. That could dramatically reset the cost curve of lithium for electric vehicles. And at a time now, right, where I think rightfully, in an appropriate way, subsidies are getting removed for those in a lot of places, including in the US. What can bring those price points down, so that they can be competitive X subsidy? Well, a battery pack's one of the most expensive parts of the car, and a large percentage of that is its active materials. You could resolve that problem again with something that doesn't need subsidy or price support.
This is fascinating to me because in Canada we're a much smaller economy, and one of the consequences of that is lack of access for capital for companies who approach the valley of death.
Yeah,
right? So any investor knows what I'm talking about. You get the technology comes out of the lab, off the bench, gets into the demonstration phase. Maybe it makes it to the pilot phase, and then it dies because it's not far enough advanced for private capital to flood in and take and commercialize it. But it still shows a lot of potential, and it just sits and languishes and maybe never goes anywhere. And Canadian firms run up against this over and over and over again. Whereas I look down into the US because I talk to folks like you all the time who are investors and are investing in these startup companies, and the amount of capital that's available, the innovation ecosystem that the United States have is second to none. It's not even China can approach it. Do you think that approach of which you are a part, it will enable the US to compete against China going forward?
I think the question gets answered by where we choose to apply that. Mentioned the US has this extraordinary innovation ecosystem. I think that's true. I think it probably stands out the most in biopharmaceuticals and in software. I think when it comes to hard technologies and things like energy, I would agree with you at the early stages. I think the US has a really good, sort of granting system, supportive organizations that help turn entrepreneurs, scientists into entrepreneurs, and early stage venture capital. I think the crossing the chasm, how do you get to demo and pilot and then full scale implementation is still getting figured out. What I worry about, and I'm actually glad about the correction that's happening now, is when you get sort of wide-eyed fervor disconnected from reality about any business or, financial theme. We see this in AI right now. What happens? A lot of stuff gets funded that shouldn't. And I think you had a whole generation during the kind of climate tech fervor in the US of 2020 to 2022, maybe, of just fundamentally bad ideas that are never going to be freestanding, sans subsidy or price support, having money flowing into them because there was just a lot of cheap money rolling around. I would say many of the efforts at hydrogen, which for our part, we have never made an investment in, because it's been hard for us to make the math work once you took the subsidies away, um, is probably, the number one example of that. I think the US can compete with China uh, if it directs that apparatus into technologies that can be freestanding on a techno-economic basis. And to give you an example, there's a company that we backed actually in your home turf. It's called Via Separations. They have this unique method to be able to take industrial separations where they're like two liquids mixed together. Traditionally, you boil one off because it's got a higher boiling point, sorry, a lower boiling point. But that needs a lot of energy to do that. And then able you to do that through a membrane that drops the energy consumption by like 80, 90%. It's a spreadsheet sale. It's not a hard thing to convince somebody to do. It's just new. Their first deployment was with a plant of International Paper in Grand Prairie, Alberta, Canada, which I've spent time in. Definitely want to go there in the summer. The winter's not when you want to go to Grand Prairie. Um, and it's the kind of thing that after early kind of demo pilot financing could jump straight to full-scale commercial deployment without needing SOPs and crutches and other things that, can really be directed toward technologies that are never going to make it in the real world. I think that's the center of the bullseye for the US administration. And I think some of the changes under Trump have actually been favorable in terms of directing that and making capital more scarce in a good way.
I have to jump in as a Northern Canadian boy who grew up in Northern Grand Prairie would be south to me, and so I find it a little amusing. Yeah, when American talks about a Canadian winter. Anyway, that aside. Well, this is very interesting. And okay, so from your point of view,
Yeah.
there are still a slew of climate technologies out there that are likely to be effective, lots of opportunity. And let me put some context in it for you. We at Energy Media, we have an energy transition theory of change based on disruptive innovations, Clay Christensen's ideas.
Yeah.
And one of the things that we argue is that most climate technologies or most clean energy technologies have already passed their inflection point.
Yeah.
And now they're like a vacuum. They're pulling others, the early stage, like the ones you're working with, they're pulling them behind them as they work their way up the the hockey stick part of
Sure.
the curve. And so we would argue then that the kind of technologies that you're doing are now more driven by market economics and consumers than they are by policy. Not that policy is not important, but still the market now is playing a much bigger role than it did 5, 10 years ago. Would you agree with that?
I would. It's also pretty aligned with our thesis as an investor from the jump. For better or for worse, Markham, I started investing in what is now called climate tech very early, in the late 2000s, when this was called clean tech and had its own little Silicon Valley wave of fascination with it that ended in ignominy, and then kind of came back in the late 2010s. And what did we learn from that exercise? We learned do not depend on regulatory or policy measures. You will miss opportunities doing this. When I was investing in the late 2000s, I avoided anything relating to solar or to wind because I felt that the investment tax credit and production tax credit that really made the economics of those work in the US could disappear in any time, possibly permanently. It didn't for a long time. And, did I personally, right, miss a wave there? I did. I'm kind of glad I did. Because if you look at today, when we get a business plan that comes in and it has an income statement that has, customer revenue at the top and, something else in the middle, a services component, and maybe O&M or something else. And at the bottom is a big thing that has a tax credit. We zero that out. Doesn't mean we might not invest in that company. It doesn't mean that, credit or whatever else may not be an effective short-term mechanism to be able to raise less expensive equity capital to be able to get to a scale that can be, techno-economic and competitive. But we won't underwrite an investment that requires that in the long term with extremely rare, kind of deeply decided firm level decisions. We're happy to have done that. Hydrogen, again, I mentioned as an example of this. There are, companies in grid scale energy storage that took on very large sums of money, 10-figure sums of capital with business models that were entirely dependent on those policy-driven mechanisms. And I think that's a way not only to lose a lot of money, but also to lose a lot of progress toward climate impact.
You said something earlier that really caught my attention, and that is the big tech companies are, setting up data centers for their AI rollouts and expansions, and they are looking beyond the grid. They're looking at self-generation behind the meter. And that sounds to me, I've been wondering about this because it's not just data centers. There are lots of manufacturing outfits and different types of businesses that are worried about outage, grid outages and higher, rising prices and so on. And they're looking at self-generation storage on site. To what extent that, I mean, that is a market-driven issue, right? I mean, AI is a market-driven technology, and if they're going to self-generate on site, that's driven by economics, not policy for the most part. How much, give us some example of how companies are responding to that self-generation, like an AI center would do.
Yeah, a few things. The scope of the problem is pretty extraordinary. The size of the queue of capacity awaiting grid interconnection in the US is larger than the capacity of the entire grid. So I really think, particularly for the hyperscalers, who are the only current source of load growth in the world, at least in the developed world, um, and who have strategic horizons that are longer than a president or a elected body. They go into the decades. When you see Meta showing up and trying to find every source of, geothermal or grid scale energy storage power it can get at. When you see Microsoft turning 3 Mile Island back on for the sole purpose of serving an AI data center, when you see wildly technically aggressive bets being made on small modular reactor companies in the fission world like Oklo, we're just in completely different territory. And no one's doing this because they're going to get rewarded by taking some big risk on some unproven thing. They're doing it because they don't have any other choice. We'll see where it goes. We look at this both from the power in perspective, but also the utilization perspective, where I think fundamental changes in core computing technology, the stuff in the innards of the boxes that are actually doing the computing and memory operations, that's where you could see real disruptive innovation in the next decade.
Oh, please expand on that. I'm very interested because we've already had, you remember the kerfuffle that DeepSeek caused 12 months ago when it
Hmm.
came out and with its power
Yeah.
consumption numbers. Is that kind of what you're talking about?
A little bit different than that, same zip code. But if you look at what ultimately limits the energy efficiency of computing today, it's something called the von Neumann bottleneck. So every computer that you and I know is a von Neumann device, meaning that logic is over here. That's where operations get done and or not adding, subtracting, dividing. Memory is over here. And in order for logic to do something, it has to fetch a value from memory, do something to it, and then put it back. We're approaching a point where that in between, where memory talks to logic, is becoming a majority of energy consumption. The issue is that that's how every computer we have today works. Let's put quantum aside. It's sort of its own thing that could have very different applications. But there are other ways to compute where memory and logic live in the same place. And this is the weird world of things called memristors, for example, and a particularly field of interesting to us called biological computing. So here's your cocktail party stat. Human body generally about 60 watts. If you're taller, might be a little bigger, shorter, a little smaller. 60 watts. A third of that's your head. We're all dim bulbs, Markham. We're all 20 watts up here. Your brain is doing on 20 watts what a NVIDIA GPU cluster needs 20 megawatts to do, 1 millionth the power, owing to it being fundamentally analog, hyper-connected, and having multiple ways to signal, both chemical and electrical. I think there's a world where a lot of our computing may be done by brains of neurons in a dish, solely from a power consumption perspective. And there are projects that we're looking at with great interest that are focused on that.
Well, that is fascinating stuff and probably grist for another conversation. Matthew, this has been a very, very interesting interview and lots of ideas. And I'm going to be coming back to you, if you don't mind, for further interviews because I think that this is an insight into a future that we in Canada, we're just not as advanced, certainly not as China and Europe are, or even the United States. And this kind of disruptive innovation that has enormous implications for energy is part of it. We need to have that conversation in Canada, and we're not doing it. And interviews like this can maybe advance some of these ideas in my country. So thank you very much for this.
Thank you. Love the discussion.